Richard Zimmerman. Richard is an advisor at We Family Offices, where he works with client families to provide advice and oversight regarding their overall wealth management needs. Richard has expertise in sustainable and impact investing and philanthropy. Richard, the floor is yours.
Paul, thanks so much. And Peter, thank you. It's a real honor and pleasure to be part of your conference. I've followed it for years and know you and all the great work that you've done in this space. So the conversation today, well, let me just back up and tell you quickly about myself too. Paul mentioned it, but I work with families and I help them align their values to their investments across the board now. And we can do that, and we'll talk about how. And today we'll discuss climate change. I, like many of us, have been in this space a long time, and I'm very excited because it's the first time, I would say the last 10 years, 5 years or so, where those of us who really care about these issues are actually able to do them in our day job. There's so much going on in the financial industry now that has grown out of a lot of other areas that are allowing us to, in essence, take a look at our investments and find risks and opportunities related to things going on in the world. And my kind of overall mindset is that this is really going to be a terrific era in front of us, as tough as it all seems out there, because there's so much kind of good coming to this and so many sort of positive forces. So I want to start with that. The topic really is about climate change and climate change investing, and I've got three big questions I try to touch on. One is, will climate change affect my investments, and should I have a climate aware investment strategy? So what are the drivers of that, and how would it affect my portfolio? And it's something I need to think about now. So that's sort of question one. Question two would be the risk. What risks are in my portfolio, and how would I mitigate them? And then three, really the big topic of discussion is strategies. Are there risk mitigation strategies? Are there opportunistic strategies? How can I build a portfolio? Can I build the entire portfolio that is what I'm calling climate aware? So in terms of the first question, the drivers, the way I look at it is I see this kind of bubble chart, and in the middle is the investment arena or even your portfolio. And then the outside of it are a lot of drivers that are coming into it. And for many years, outside drivers may have affected your portfolio, such as the growth of the economy, what the Fed is doing, monetary policy, business outlook, et cetera. And right now, though, I see a number of different drivers that are affecting your portfolio now and in the future. Obviously, planetary stress is one of them, and there's nowhere to hide with that. So what's going on out there in the climate and the hurricanes, droughts, wildfire, et cetera, is becoming front and center, not only just in terms of now news, but in terms of investment discussion and outlook. Ethic and activism is very much a growing movement right now. It really started years ago in the values aligned space and the impact space, but right now you can surely see that building on many fronts. Policy is the big one, and policy needs to go further, and it depends on where you are in the world, and it is where policy can have more of an influence or not, but that's a huge driver. The not-for-profits and the NGOs in the world that have been built up over time that have been working to move these issues front and center and support them are big drivers. Obviously, economic drivers. So, what are the effects economically that could happen in companies and in markets, and ultimately your portfolio? Technology is the big disruptor in everything, and so how is technology going to be a disruptor in this space? And then the capital markets as a whole. So what are the physical and transition risks throughout the spectrum of the capital markets? How is that going to create pressure on the companies within it to change? How do I look at that, and will the markets respond? So there are a number of drivers that are coming into the equation now as it relates to climate that may have been there front and center, at least 5 or 10 years ago. And I would say in the next 5 or 10 years, they're all going to come very strong at the same time, some in a positive sense and some as a negative sense. So that's kind of question one, and we can talk about that. And if you have any questions, and we can certainly kind of pontificate whether or not some are going to be bigger than others, or for instance, if policy doesn't move as fast, will that slow things down, or will markets come in and make the change anyways? And those are really good discussions. But my overall thesis is all of those drivers are going to affect your investments and portfolios, so you should be aware of them. Now, in terms of risks and how to mitigate them, the way we're thinking about it is there's two big categories of risk, and one I think we're getting more used to, which is ESG risk, environmental, social, governance risk, and that's being built in a lot of different portfolios, and I think that is part of a climate-aware strategy. So a very healthy portfolio strategy should take into account ESG risks. You should have managers that are thinking about ESG, companies underneath that are moving towards improving their ESG scores with all the processes and services and attempts to do that. So I think that any climate aware strategy should also be an ESG strategy. And some of that, especially on the environmental side, will point more towards climate anyways, of course, but it'll obviously affect governance and social too, because the climate is affecting every category anyhow. So ESG we can talk about, and I think that's an important factor to have in your portfolio throughout. But this is not the only factor. And I think or if you drill deeper, I think you really have to think about carbon risk. And that's where there's, as I mentioned, academics, science, not-for-profits, NGOs, all of these groups have been coming in now, big data providers, to talk about what is climate risk, how can we measure it, how do you look at it in terms of your portfolio strategies, in terms of the companies you're investing in. I know this group knows this better than most, but it hasn't been a key risk until recently, and it'll be a big risk going forward. So, fossil fuel involvement of the companies, operations risk and carbon products and services risks, stranded assets risk. People talk about stranded assets for many years. How much emissions is your portfolio putting out as a percent of maybe revenues of the portfolio? So carbon, what some services call carbon intensity, carbon management risk. How good are the companies at managing the risks? And will they sort of move forward and lean into this, or are they going to sort of hold back and sort of stick to old practices? If you bucketed them, obviously the older energy industry, utilities, materials, industrial sectors will have higher levels of carbon risk anyways, and lighter areas, it's technology and healthcare, will have lower, but you can't just sort of split it that way. Of course, portfolios have to be diversified. So you have to think about, how do I de-risk carbon through my portfolio as a whole, no matter what sector I'm in, and how I'm going to move more into sort of carbon, the right word is, but more carbon solution oriented. Another way people are talking about risk is related to mitigation risk, transition, adaptation, and resilience. You'll hear all of those terms. So are you in an industry or an investment where you're trying to mitigate the carbon issue, or are you on the other side of it? Where would those companies be in the transition? Resilience is a big thing, because as there's been less money going into resilience, which and adaptation, more has been pointed toward mitigation. But because of the stresses are going to get so big, I think more money will then shift into these other categories, because we've got to shore up our world. You see what's happening in the West Coast and in the Gulf states, et cetera. So those areas, I think, what we have to be front and center and start to think about positive solutions for that. Just checking any questions, Paul, right now. I can't hear you. You have to unmute. Yep. Okay, there you go.
Okay, there we go. Yes, we have a question that is related to um, the relationship that investors have with their financial advisor. One of
Yeah.
the questions that a lot of investors are asking these days is, well, I don't really hear from my financial advisor about these types of climate-related issues.
Yeah.
As part of my portfolio risk strategy plus opportunity strategy. So
Yeah.
how are you addressing that with the people that you work with?
Yeah, it's a great question, and actually will be a good segue into the final part of this, is how do you build a strategy? But uh, personally, I think that there are advisors that are more aware of this whole category, whether or not it's ESG broadly or climate specifically. And you should push your advisors to see where are they on that, where are the firms on that, are they offering product solutions, how educated are they in this? So that's your first sort of report card, anyways. And my key thing of all of this is build the right team. I'm just going to tell all my families that I work with. Now, I may be the advisor, but they have other advisors, they have product providers, they have other managers, et cetera. You want to have the right team around you because this is going to change rapidly. And if you don't start getting to the right team now, in a couple of years, you'll be way behind. So I think that what do? You ask them if they are. If not, I think you push them. And if not, then you start to think about other people who might be a little bit more evolved in this. And I think that you can do it from a broad-based point of view, but also from a portfolio construction point of view. So you can talk about the general ideas, but then how do you solve them? The way we approach it, we have a 5-step process to overall what we call values aligned investing. But as it relates to climate, it's a very typical process that you're going to see with any investment portfolio strategy. So you assess, you create investment policy, you do diagnostics of the portfolio as is and going forward, you construct a portfolio, and you review and report. That is a standard process that most every investment advisor uses in some format or another. So if you assess, you think, well, wait a second, what are my concerns about climate change? What would I definitely not want to have? What would I want to be heading forward? And you start to think about that. So you're educating yourself, like I just did in the first part of this, to really learn and finding out, do I want to exclude things? Do I want to emphasize things in my portfolio? What makes the best sense? From that information, then you can build an investment policy. Well, what we're doing now is creating climate aware investment policies. The typical investment policy statement now has whatever the values aligned theme is, and it could be overall or it could be in climate, it is now built in the IPS, and that's very important. And there are some major groups out there that are actually putting them on the web, and they're very, very specific. So that creates the roadmap for your portfolio.
Okay.
What we also do is okay, Paul, sorry.
All right, we've got a couple of other questions that have come in, Richard,
okay.
so I wanted to get to those while we still have you on screen. And how is your organization engaged in investing in early stage companies that are developing climate solutions? And if you can give us any examples, which industry sectors are you engaging in?
Yep, good question. And that really goes to portfolio construction. So once you build your policy, you start to think, well, where can I do it? So you asked, the question is about early stage, but just first of all, you could build a climate aware portfolio strategy in every asset class, and both from fixed income, cash and fixed income, all the way out to private investments. And you could also do them in passive and active investment in the strategies. In the solution side of things, so you can do the mitigation, transition, and you start to think about that. But in the solution side, there's so many different areas to invest. Now, we invest in managers first who will find these businesses or investments. So that's the way we invest. Sometimes we'll do a direct investing also, so I can talk about that. But the key is to say, well, what would this climate fund do? And there are public and private funds that do that. And they're at the very early stage. So you could do venture capital, seed, pre-seed, Series A, the early side, or you could do growth equity. And we've looked at I look at probably 3 different strategies a week now. both in public and private. So I'm seeing it across the board, and I'm seeing not just emerging managers, but managers that are raising now well over $100 million in a fund. So this is all going to ramp up. You could say, I want to do a adaptation and resilience strategy. I'm actually looking at one right now, and there's people who have a very specific strategy based on that. And they may be doing things in infrastructure, grid strengthening, in the food side of things. There are funds and strategies in the tech and analytics side of things. So I've seen things in geospatial imaging and mapping of carbon and carbon, carbon emittance and agricultural analytics, how to measure things going on in the supply chain, how do you manage risks and impact overall, think about the insurance industry, solutions across the board, energy efficiency, carbon capture, carbon avoidance. You say, well, one of the big themes is transportation. So sustainable transportation, electronic vehicles, autonomous vehicles, batteries, charging stations. The whole water space falls right into this. So water access, purity, sanitation, treatment, infrastructure, water sensors, irrigation, that very much falls into climate. There's also a lot of work being done in the whole land space right now. We heard about the trees earlier, but land and grass and trees and vegetation are huge stores of carbon. So we need to do more of that in a better way. And there's a big movement in what now is called regenerative agriculture, regenerative and sustainable forestry, sustainable food. You could enter it in that way. And you could enter it, obviously, in the one they talk about the most is clean energy, renewable, wind, solar, biofuels, hydrogen, distributed energy, and then the circular economy, Paul, the waste to value, sanitation, recycling, even plastics as it falls into both pollution as well as climate.
So we've gotten one that you haven't mentioned in a question, Richard, and that is fusion energy.
Yeah, sure. I'm not an expert in that. I've seen a number of fusion deals out there, and there are some very big thinkers out there that says that this whole space, and I don't know, whether or not it's in somewhere in the nuclear space or fusion, is an area that we're going to have to put investments into just because of what's going on in the world. But I'm not an expert in that, but I have seen that out there, and so some people are saying, look, we're going to have to move into that space. I don't advocate it either way.
Okay. All right. Another question that comes up, especially when you're, as an advisor, you're focusing on working with family offices, Richard, is how cross-generational is the work that you do with the families that are invested?
Well, it's just, we actually started to hear first from women and the younger generation, and that's what statistics are telling us anyhow, but anecdotally, that's what we're hearing. Now it's brought into every demographic, but I think what's really cool is I have a number of cases where the next gen has been talking about this for a while, but hasn't been able to sort of move the family yet. But when they work with us, we can create a sound policy for them. So we actually create investment teams of the family. We go through all these processes. We create special purpose vehicles to invest in, the investment committees. We're doing sound investment management, portfolio management. So everybody starts to feel a bit more comfortable and get it versus, hey, it's the younger generation and they have this kind of crazy idea. No, it's really being built in a thoughtful way. So that's been a real value add for us, I think.
Terrific. Well, Richard, we've answered all the questions that came in. If you have any closing remarks, you have about half a minute.
Okay. So the closing remarks is start to think about having a climate aware strategy along with all the other things that you may be doing in the themes that you like or care about, but put this into sort of your thought process. Challenge your advisors and ask them, what are they doing in ESG? What are they doing in impact? What are they doing in climate aware or social issues or anything? Stay on top of them. Think about the risks that could be in your portfolio, the physical risks that come in or the transition risks. and then start to think about solutions. There's so many interesting things out there. They're playing into the whole tech boom. And I think, there'll be absolutely a lot of growth in those areas as well. And have sound portfolio strategy, obviously diversified strategy in all your asset classes. Continue to educate yourself and start to really build the right team. Those would be all my suggestions.
All right, thank you very much, Richard Zimmerman.
Okay.